Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more. Well, hello, good morning, and welcome everyone. It is Wednesday, January 22nd, and this is the AgYield War Room. I am, of course, everyone's favorite backup host and AgYield marketing manager, Jack Coakley. As per usual, feel free to join the discussion any way you can. Post a comment or email us at info@agyield.com. We'd love to hear from you and see what's going on in your life. Speaking of what's going on in my life, I'm happy to announce that my son Leonard, who's 3 months old, finally slept through the night a full 8 hours. So let me tell you, I feel like $1 million today. I've never been more energized to host the show, and yeah, it's really going to show. Leonard, if you're watching at home, please don't be sleeping and sleep later. Without further ado, let's go over to Brad with some overnight numbers.
Oh, sure. So we got March corn 3/4 lower. March soybeans are 2 1/4 higher. March Chicago wheat's 3 cents higher, and Kansas City wheat is 4 1/2 higher. We also had a flash sale too, so 136,000 metric tons to unknown destinations.
Wow, that was excellent work, Brad.
Hey, thank you.
You might have a permanent job.
Yeah, Brad, was that corn or beans on the sale?
And that was corn.
Corn.
Yeah.
Wow.
There we go. Electric. Without further ado, enough yammering from me. Let's start with some of the discussions of what's going on in the grain markets and whatnot. We'll start with Ben, and then we'll work it around the room.
Yep. Looking at corn since the report, in 6 of the 8 trading days that we've had, we've made new highs on 6 of those. Pullbacks have been limited to about 6.5, 7 cents. You kind of look at this and think, oh, there should be a shakeout at some point. If nothing else, to keep people honest, but it really has been a rock. Even yesterday, after making new highs, it went negative, came 6.5 cents off its highs, found buyers, finished on the highs of the day. So I think corn has been a really impressive, steady trade. We negated a lot of the negativity. We got above all the major moving averages. We saw in soybeans a similar type of trade, maybe 6 weeks to 2 months later, where they just quietly kept covering their shorts. And we want to go and put a label on this and say, well, it's delayed harvest in South America, and it's dry in Argentina, wet in Brazil, and we're trying to justify this, but there was a lot of people that were buying. Covering their bigger short positions in corn and soybeans long before that happened. And you look at it and you go, okay, above major moving averages, they're going to continue to buy. Below, they're going to continue to sell. Corn is a long ways away from putting any real pressure on the bulls. It doesn't mean that we don't have a pullback or that we can't dislodge some of that with some sort of news, whether there's a lot of moving pieces and a lot of things moving around right now. So, but it's really, they kind of doing the same thing in beans that they did in corn. Fundamental situation in soybeans, not nearly as supportive as corn. I wonder how much more traction we can get in beans. We are getting close to going up and tapping the 200-day there, which would be pretty exciting. And that sets up around 75. And then you look over at wheat, still a pretty sizable short there. It's above its 50 and above or headed towards its 100-day at 575, above the 20, above the 50. And the 200-day sits at 607, which would be near the highs that we saw back in the planning window. So, I kind of look at this as, maybe there's a bigger change to wanting to own commodities. Certainly, soybeans stick out to me as the one that you wonder how much they can get out of it. But we've seen some pretty tremendous soybean rallies at times when you least expect it. And, hope and a quarter will get you a cup of coffee in this business. But It's finding buyers on setbacks. It did all the right things the other day when it tested major moving average down at 1020. And here we go now, getting ready to tap the next big level up around 1075. So markets feel strong. The announcements of lower interest rates. We've seen the dollar trend kind of fall over. It's below that trend line. So there might be a little more excitement for ownership in U.S. grains. I think corn is the one that is as a necessity on paper that it's tight, right? And we saw a big change there. Soybeans domestically not overburdensome. Globally, it looks like it probably will be. And wheat domestically, we're the last stop in for global demand, and I think we're getting there slowly but surely. So.
Excellent. Yeah, thanks for that. Rylan, we talked a little bit yesterday about Trump comments and upcoming policies and stuff like that. I'm sure the dust is not settling there in any capacity, and the conversations are still being had. But what are some of the macros and other things that are still on your mind?
Well, there was some rumblings about this yesterday. Surprised it's taken this long to kind of get the news out, but it seemed like Reuters put out a story yesterday, kind of late and into this morning. So it sounded like China was halting Brazilian soy imports over phytosanitary issues. So 5 firms have been suspended. So now it's officially on paper, and it looks like it was on the 14th, January 14th, that Chinese customs suspended these shipments from Cargill and ADM in Brazil. So I think just the fact that that news is getting posted now with the market responding the way it has may have had a little bit of something to do with this last kind of leg up here for the most part as far as beans go. So I think that's something to keep an eye on. There's really not much of a time frame. And at this point, I think that's some of the bigger news that, obviously the U.S. markets are going to see that as pretty friendly. So it just feels like the market's known about this for some time, but it's just now kind of hitting the wire. So Ben could probably attest that usually it's kind of a buy the rumor, sell the fact once it finally hits the wires. But we'll see. This could be a longer term issue. Not really sure what the lasting impacts will be. So I think you kind of got to take it in stride.
Certainly. Yeah. We will definitely keep our ears to the wind on that. And Dan will be back tomorrow. If there's any updates there, we can talk about that in tomorrow's War Room. Brian, what's going on in your neck of the woods?
Yeah, I just noticed overnight beans were kind of heavy to start the night. I think you probably saw some profit taking coming in for sure. And then I think the euro came out. Brazil still getting hammered with rain, so that's going to slow down, harvest on that front. And then Argentina still remains dry. Also, the real, as Dustin mentioned in his letter last night, we were almost up a full percentage point on the real since. Made that high off the Fed contract since November 27th. So, and then overnight, real is again being pretty, strong here. So it looks like that might have stabilized. That's going to kind of turn. It seems like it kind of turning the beans around here from what we saw the little weakness to start. So we'll see how that kind of plays out the rest of the week here.
Certainly. Well, not much other news out there, I think, at the moment. Anything else before I shoot it over to Ryland for meat stuff, guys?
Yeah, I would just add that, kind of looking at feeling a pulse and narrative of talking heads and different people. Markets, when they turn, we've said this over and over again, are difficult. And it feels to me like they've kind of put the bears in the torture chamber. Right, and soybeans and corn, and it can stay like that for a while. And there's you can give me any narrative you want, but the same narratives keep coming up as to why beans should be breaking or corn is overvalued or whatever it is, and we're going to trade what we're going to trade. And right now, it feels like there's a contingent that is fighting these moves. Doesn't say that I'm not going to say that they won't eventually be rewarded for it, but it certainly feels like there's a little pain going on for people who have relentlessly sold beans. I have been on the other side of that trade before, and I can tell you it is not fun when they turn. And certainly corn has already done that. And then similar for wheat, people that have bought wheat for the last 2.5 months have been continually punished. And I think that wheat's starting to make that turn now to kind of keep people a little bit more honest uh, on how they, maybe the wheat sellers are getting a little bit of pressure finally. Certainly the corn sellers already have. They flipped out of that. And in the last 2 weeks, we've seen that in soybeans. So,
yeah. Thanks for that, Ben. Thanks for plugging my heavy metal rock band, Bears in the Torture Chamber, available on Spotify and Apple Music, anywhere you get music. Ryland, what's going on in the meats, man?
Yeah, so kind of a mixed action yesterday. I think all the eyes are on cash right now, but just feels like we're kind of stuck a little bit. And there's kind of a bull spread going on in both feeders and the hogs and in the cattle. So just kind of interesting trade, just kind of choppy session overall, inside trade. So we're obviously just kind of waiting on something here, some more news. And we saw a little bit of cash trade yesterday in the south at 201, pretty steady with last week, and then 320 in the north, so steady-ish, maybe even a little weaker. But overall, I think the focus is going to go on the cattle on feed report. So we're looking for on feed at right around 100, placements at 102, and marketings at 101. So I think those are the numbers we're going to try to price in up until Friday. So could be a little bit of a wild ride, especially just watching the cash market. I think there's a lot of concern that prices could just fall out of bed at any moment. Typically, I think, at least from a seasonal standpoint, I think overall futures are kind of looking to stay pretty firm for right now, maybe into kind of mid-Feb, but we'll see. We're at a record high price, so it just, producers are recommended just to keep a heavy amount of protection here in the interim. And then on the hog side of the market, like we said, same thing. There just really wasn't too much going on in the front end of the market, but the back end of the market sold off pretty good. I think we are starting to see a little bit of just some caution here, just in case these tariffs do show up and what kind of details we're going to see. It sounds like it's going to be a 25% tariff on Canada and Mexico. But we were seeing some kind of weaker fundamentals here as well, but the front end of the market still kind of held up okay. Cut it was down 149. Cash was up 80, 58, 79, 75. So overall, things are holding up okay, but it just feels like the product market and the primals could take a little bit of a dip here. So overall, the feeling's just a little bit on the weak side, just going into today.
Excellent. Well, thank you very much for that insight. And of course, if anyone has any questions or wants to talk about any of the things we've discussed today, feel free to reach out. Phone numbers on the screen here. You can always reach us at info@agyield.com. Thanks again for everyone who tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. Helps us with the YouTube algorithm. It gets our content out to the larger YouTube audience. It doesn't cost you a dime, and it helps us out. So we sincerely appreciate it. We recently hit the 500 subscriber threshold, and Dan rescinded his offer to let me move into his office. But there's always the 1,000-person threshold. So who knows? It's only time will tell. Thanks again, guys, for dealing with me as your host. And we will see everyone tomorrow. Dan will be back, and I hope everyone has a good day. We'll talk to you soon.
Thanks, Jack.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.